Elon Musk recently said that DOGE would audit the Fed, but the Fed already publishes audited annual reports every year. I have copies of every one of them. KPMG, one of the big four accounting firms, has audited the Fed's annual reports since at least 2015. Therefore, I seriously doubt that a new audit would uncover any accounting errors or anything that could be considered illegal. Be that as it may, the Fed is conducting monetary policy in a way that is costing U.S. taxpayers hundreds of billions of dollars, and DOGE should put a stop to it. This video will show that the Fed is diverting shockingly large amounts of money from U.S. taxpayers and handing it over to commercial banks and money market funds unnecessarily as the result of having changed the method it uses to control the federal funds rate starting in 2008. I estimate that this mistake has cost U.S. taxpayers more than $600 billion since 2022, and the losses continue to mount with every passing day. This is where DOGE should focus its attention. The savings here could dwarf all of DOGE's other achieved savings combined, and luckily, there's an easy fix. To illustrate how much the Fed's new method of controlling the federal funds rate is costing U.S. taxpayers, the following slides will show how the Fed went from making very large profits before 2023 to experiencing very large losses afterward. Later, the video will explain how the Fed can revert to its original operating procedure and thereby become extraordinarily profitable again. This is important because the large profits the Fed would then once again earn annually would significantly reduce the government's budget deficits and debt during the years ahead, because the Fed is required to turn over all of its profits to the Treasury Department every year. In other words, to U.S. taxpayers. Let's begin by looking at the Fed's total assets, a breakdown of the Fed's major assets and liabilities, and the Fed's profitability up through 2007. This chart shows the Fed's total assets from 1914, when it began operations, to 2007, on the eve of the crisis of 2008. At the end of 2007, total assets came in just under $900 billion. This chart presents a breakdown of the Fed's major assets and liabilities up to 2007. Treasury securities dominated the asset side of the Fed's balance sheet. Federal Reserve notes dominated the liability side.